To remain updated with the latest business news, click on the bell icon.
Hello and welcome. You're watching Business Today. I am Sakshi Batra and we are going to be discussing and focusing on what should be investor strategy amid the current volatile environment of the stock markets and the uncertainties around the geopolitical tensions and the worsening macros on many accounts, be it inflation or the rising crude oil prices. What is the best strategy that you as stock market investors and other asset class investors can adopt at this point in time? To share some more insight on all of this, I have a very special guest joining in with me, Mr. Avinnash Gorakssakar, Head of Research at Profitmart Securities, joins right in. Thank you so much, Mr. Gorakssakar, for taking out time for this discussion. Let me kickstart by asking you, what do you really make of the Ukraine-Russia crisis with respect to the Indian stock markets and investors? Is it going to be more problematic going forward from here, or is it going to be just a small, short period of volatility and one should really avoid and focus on the long term?
First of all, Sakshi, I think thank you for inviting me. And first of all, as far as the Russian and the Ukraine crisis is concerned, I think one thing is very clear: the market is not yet completely satisfied with the developments which have happened till now. There's a lot of uncertainty in the market. There are some news flows which are coming from Russia. There are some news flows coming from Ukraine. So I think the markets is in a clear uncertain phase. And I think at this point of time, it's very difficult to actually pinpoint and say what could be the net result of all this. But definitely, I think the tailwinds look to be pretty challenging, and I think investors should be really careful. If at all there is a war which erupts in Ukraine, then I think you could see a kind of a major correction coming in the markets. But nevertheless, having said this, I would believe that these are also some sort of long-term opportunities, because wars do not last for a very long time. And I think investors should focus on the fact that last year in around March 20, we had a similar situation. COVID had happened, and I think we had obviously we were at the bottom of the barrel. But I think gradually the markets picked up. So I think those who have got a high risk appetite can definitely start nimbling into some good quality businesses which are available at very good valuations. I think the only category and the way we look at it is look at companies which have got good businesses, good managements, and which are low on debt and which generate a reasonable amount of good cash flow. Because I think retail investors normally can't time the markets always. So this is a good time to actually look at building a portfolio for the next, say, 2 to 3 years. So I think one has to see opportunity in every crisis. And I think that should be the strategy investors should follow.
Absolutely. This is what I was actually coming to, as most of the investors are jittery at this point in time. Are you really advising them to be really picky about the stocks and the companies that could create an opportunity in this down kind of a market? Or is it like catching a falling knife? One is very unsure of how to do that. And should one really look at taking some of the cash off the table after having some 2 consecutive, very, very strong years on the stock markets and strong years of profits as well?
Yeah, I think Sakshi, my guess is that investors who have made very good money should obviously book some money and try to take their capital at least. The second point is basically investors who are willing to take that extra risk and buy into the fear should definitely not allocate all their capital at one point of time. Assuming that you have 100 rupees, I think you can at least start allocating 25 to 30 rupees and obviously wait for further developments in the market. But I think this is definitely not a time to completely ignore the markets, because one good part is that corporate earnings are growing, and I think management commentaries across all the major companies have been quite positive. So I think corporate India is bouncing back. COVID is now no longer being talked about by anybody in the markets now. And I think the real worry is basically on interest rates, on the crude prices, on US tapering. So I think these things will definitely be in major focus, and probably that will take maybe a couple of months for the markets to consolidate. But post May, June, I think once things become a little clearer and we have a normal kind of a year apart from what we happened in the last 2 years because of COVID, I think there are plenty of opportunities where investors can take a call. But I think you need to be patient. I think in the last 2 years, investors have made very quick money, and that has actually spoiled a lot of retail investors. So I think you need to have a little bit of patience and a little bit of conviction when you buy into the markets at this point of time.
Right. 2 more concerns apart from those that you talked about, the crude oil prices and inflation, and that what that is something that we've been witnessing over the last few months now. The continuous sell-off by the foreign institutional investors. Why are the FIIs, treating in a very stepmotherly way into the Indian markets? The kind of sell-off that we've seen is perhaps in the recent history, we've not seen that kind of a sell-off. So what do you really make of this, and what will be the impact in the future on stock markets of this if this continues?
Yeah, I think first of all, 2021 was a record year for India in terms of the FII flows. So obviously, a lot of money has been made by the FIs. So one reason could be that FIs are obviously booking their profits and cashing their profits. The second reason is the US economy is doing well. The US dollar is appreciating. And once the US tapering takes off, then you're going to see a lot of liquidity, going away, which is invested in emerging markets like India, China. So I think it's not going to be the end of the road. Yes, the FI selling is definitely going to impact sentiment because a lot of liquidity has got sucked out from the system. But nevertheless, our belief is that today we have a very strong retail base. We've got a very strong domestic mutual fund base. LIC is also investing in the market. So I think you got to look at the silver lining in the market, that all is not completely wrong. Overall, I would believe that the FI selling could possibly end maybe after the second half of 2022. So I think it's going to be a time before we see. Everything depends on how many rate hikes happen in US, what is the quantum of tapering, and that would decide the FI flow. So I think at least 2022 is going to be a challenging year. We'll have to wait for some time before we see the FI flows coming back in the Indian markets in a big.
Right. Now, since you've been saying that there are plenty of opportunities in this current market as well, could you help us understand if you have any strong conviction pockets that you are looking at buying in the markets right now? Is it ITs, is it auto, or any of the domestic facing stocks as well?
Yeah, I think within the sectors, you rightly mentioned that IT and auto are sectors where we are quite positive. In fact, we believe that IT is one sector where possibly you're going to see multiple tailwinds in terms of a weak rupee, a stronger dollar. Most importantly, COVID and cloud is going to be a very strong emerging space for most of the IT players, both from the large cap and the mid caps. Autos are definitely looking interesting. After a long time, we are seeing management commentaries from Mahindra and Mahindra, Maruti, pretty positive. So I think, the semiconductor issue is also now getting sorted out. But I think 2-3 sectors which also look interesting are the hospital space, the capital goods space, and obviously, companies which are on the export front. So companies which are into exports in a big way. So I think there is a kind of a very big basket of opportunity for investors. I think one needs to take a longer term call. And I think companies which have got decent cash flows, which have got good revenue visibility, and obviously which have got very good businesses will definitely continue to flourish. Markets definitely are worried about inflation. But mind you, markets rise when there is a higher inflation. So, the inflation obviously hurts the economy, but corporate earnings do get a boost at this point of time.
Okay, understood. That's an interesting anecdote right there for investors to really understand the benefit or the positive side of inflation as well when they're looking at stocks as an opportunity. Help us also understand how are you looking at the reopening trade now, since you said that the COVID is now perhaps behind us. We are keeping our fingers crossed. Nobody is really talking about the after effects anymore. So, where do, spaces like QSR, restaurants, aviation, multiplex shares, do they figure in your buy list now?
Yeah, I think my guess is, in the scheme of ranking, Sakshi, I would say that, the hotel sector, the QSR sector, typically the tourism sector is something which we like. I think as far as, the multiplex or the entertainment sector is also going to improve, but obviously you require a huge lineup of, movies, which has not yet happened on the multiplex side. And most importantly, these stocks have already, and gone up significantly. So in terms of valuation comfort, there is a very little chance of making incremental money here. But yes, I think you could also look at unlock trades, for PSU companies like IRCTC, which is going to be one of the biggest beneficiaries once the unlocking happens, normalcy kicks off. So I think there are plenty of opportunities. One has got to be a little patient because post April, May, if there are no cases of COVID, then I think the markets are going to be extremely positive and overjoyed, because this was a major dragging factor for the markets in the last 2 years. So I think these kind of issues like interest rates, or for that reason the US tapering, crude prices, these are things which the markets have already discounted. There's nothing as a major negative surprise.
But for 2022, would you still go ahead with equities as your best bet among all the asset classes?
Yeah, I think, see, as an investor who looks at the market from a long-term point of view, Sakshi, I would definitely not ignore equity, despite the fact that, this year on the index level, we could possibly get at best about 8 or 10%,
Hmm.
upside compared to say 20, 22% last year.
Yeah.
I think this
Yeah.
is going to be a very good year for investors who want to consolidate their portfolios, who want to build portfolios, because this is going to be an opportunity, a time where, obviously investors may get frustrated. Stock prices may not move up despite good numbers. So this is a good time to actually accumulate good businesses and wait for good times to come, probably, after a year. So I think to
Yeah,
that extent,
absolutely.
equity should not be ignored.
Right. Would you also be looking at the upcoming LIC IPO as an opportunity, and how are you advising all your clients and investors to approach this space, since this is being looked at as a lot of FOMO area? Everybody wants to go for it, but we don't know how, looking at the past references of PSU companies and large companies entering Indian markets, one is still unsure, but how are you looking at it?
I think LIC IPO is going to be a historical IPO. They have a embedded value of almost 5 lakh crores. So typically market values such companies at least 3 to 3.5 times their embedded value. In terms of size, there's no doubt that this could be one of the most largely traded stocks. But if one were to look as a just as a listing kind of gain stock, then I think LIC IPO may not give that kind of positive surprise. In fact, the
Yeah.
markets are now looking at the fact that this IPO is coming at a time when the market sentiments are extremely weak. So a lot of liquidity would get sucked in, and post listing, I think it's difficult to presume that whether it would give you a 20, 25% kind of pop up. So people who
Yeah.
want to take a 2 to 3 year call could definitely look at it as a long term investment, because investments, in insurance companies, for that reason, are unlikely to give you any short term returns. In the longer term, yes, there could be an upside, but people who want a quick buck maybe from the LIC IPO, I think they could be a little disappointed.
Okay, understood that. Well, on that note, thank you so much, Mr. Gorakssakar, for speaking with us and sharing all these insights on markets and how investors should approach the current market scenario. 2022, while might be a year when you could have enough opportunities to consolidate and build your portfolios, most of the negatives in terms of macros, inflation, crude oil prices are discounted at this point in time. But in case worse situation comes in on the back of Ukraine-Russia crisis, then there could also be some more opportunities for investors to get into some of the good long-term fundamentally strong stories as well. Thanks a lot for sharing all these wonderful insights. We hope to catch you again on Business Today to get more insights on investors and on markets. Thanks a lot for joining in.
Thank you.
If you like the video, do like, comment, share and subscribe.